Another crash won't look like 1929. That sounds reassuring. But here's the contradiction. The same technology that's supposed to protect you may be the thing that breaks the system faster than ever. Back then, people panicked because prices were hours behind. The numbers you saw on the big board were 3 or 4 or 5 hours behind the actual numbers. Today you see everything instantly, on your phone, in your pocket, and that changes how fear moves. In 1929, people crowded the New York Stock Exchange trying to find out what's happened to their money. Now you don't need the street. One post, one alert, one accurate warning, and everyone moves at once. That matters to you because your savings, your job, your cost of living don't depend on history books. They depend on how fast panic spreads now. We like to believe modern rules make another collapse impossible. An SEC, no legal insider trading, capital requirements, a playbook. But notice this, every safeguard assumes time. Time to react, time to stabilize, time to intervene. So here's the question that should make you pause. What happens when the system doesn't get time anymore? The core question isn't whether 1929 can happen again. That's the wrong frame. The better question is whether we can reach something that feels like 1932 by a completely different path. Because even the people who lived through 1929 didn't immediately know what they were in. The crash wasn't destiny. It was the first domino. Here's the factual baseline. In 1929, there was no SEC. Insider trading was legal. Banks had zero capital requirements. There was no FDIC, which is why bank runs followed. And when things started breaking, the Federal Reserve basically did nothing. Add tariffs, a gold standard that restricted money supply, and austerity layered on top of a shock, and unemployment eventually hit 25%. Now notice the pattern. The crash alone didn't cause the depression. Policy choices after the shock did. That matters today because we now believe we have a playbook. When panic hits, you throw money at the problem. Bernanke did it in 2008. We did it again during the pandemic. But here's the reframing question. What if the next crisis isn't about whether we know the playbook, but whether we can still afford to use it? Here's the kicker. It's not just about debt, it's about the speed of today's system. In 1929, information was slow, bank runs took hours, days, maybe longer. But now, with Twitter or Reddit, someone hits send, and everyone knows within minutes. One tweet, and a bank is gone by the weekend. The Silicon Valley Bank failure made that painfully clear. The information spreads faster than anyone can react, and that's where technology flips the script. Yes, it's faster, but it's a double-edged sword. Information can be accurate, but it can also send people into a blind panic. You don't need a panic in the streets anymore. You need a panic in the pocket. Now, what does this mean? It means that today's crash might not be about the slow buildup of too much debt. It's about the rapid explosion of fear. When the facts hit, do you see the difference? The system today doesn't give you the luxury of time. It gives you the pressure of instant action. Let's take a step further into the chaos. Right now, people are betting on everything: corporate debt, crypto, private credit. The numbers are staggering, but more troubling is how hidden it all is. Private credit alone is worth nearly $2 trillion, but no one really understands how it links to the rest of the market. The Federal Reserve doesn't fully grasp it. Jay Powell himself admitted it. It's like driving a car without a full view of the road. But here's the real risk. You've heard of debt, but have you heard of short-term treasuries? The US is trying to offload them right now. The government wants to pay less on its debt, but this is a game of chicken. If things go south and bond rates spike, the government will be forced into a death spiral. Higher rates, more austerity, less growth, and in the worst-case scenario, 25% unemployment. What happens when you realize your emergency cushion is thin? When you realize the systems you trust could start buckling under their own weight? Now, let's zoom out and look at how the rules have changed. Wall Street isn't just greedy, it's caught in a cycle of FOMO, fear of missing out. It's this invisible force that drives every decision, and it's not just about greed anymore. People today aren't just looking to build wealth slowly. They're chasing big scores, jumping into risky markets because the tech in their pocket makes it look easy. And here's where things get really unsettling. There's more inequality today than ever before. And it's not just the numbers, it's the perception of never getting ahead. People look at their screens and see other people getting rich, and they feel like they've missed the train. It creates this feeling of desperation, a need to risk everything to get in on the next big thing. This isn't the world of slow, steady investment anymore. It's the world of lottery tickets. And that's a problem, because when you gamble like that, you're betting not just on the market, but on your own survival. That's what drives irrational decisions. And that's the kind of environment where crashes breed. We've already started seeing the cracks. Private credit markets, for example, are growing fast, but without the transparency needed to track it. It's almost like a shadow economy of debt. People think they're fine because they don't see the full picture. But the real danger? The interlinked nature of this debt. A failure in one part can cause a chain reaction. Think of it like a web of connections. Cut one thread and everything falls apart. But that's just part of the story. The other part is the fear of the unknown. We're living in an era where information is at your fingertips, but real knowledge, understanding how everything fits together, is harder than ever to come by. This lack of clarity isn't just a problem for Wall Street. It's a problem for you, for your money, for your future. The unknowns are getting bigger and no one has a clear map anymore. And that's why we're on the edge of something that's unpredictable. The next crash could happen in the blink of an eye, and it could look nothing like what anyone expects. Here's where it gets tricky. The next crisis won't be an obvious choice between a meltdown or recovery. Instead, it's likely to take two possible paths, and both lead us into uncharted waters. One path, it could be a controlled disaster. The government could throw a few $1 trillion at the system buying time, but at what cost? You'd see inflation, rising rates, less trust in the system. It would be the equivalent of limping through, but with even bigger long-term consequences. People would lose faith, and that's the slippery slope. Then there's the second path, the one no one wants to talk about. If things unravel too quickly, if debt hits critical mass, if bond rates spike too high, suddenly austerity becomes the only option. We're talking about massive cuts, job losses, and a deep economic freeze. That's when the real question comes. How long can the system sustain itself under those pressures? We don't know which path we'll take, but what we do know is this. The next move is already in motion. Now, let's put this all into perspective. The real risk isn't whether the crash happens, but how quickly it escalates. The warning signs are there. You don't need to wait for another 1929 style crash. We're living in a world where things move fast and panic moves faster. The system isn't designed for the kind of rapid, interconnected collapse that could unfold today. So what does that mean for you? It means you're caught in a game with invisible rules. It means what seems like a strong economy can collapse in seconds because of a single tweet, a sudden decision, or a shift in global confidence. And while the government may have the playbook, it's becoming clearer that the playbook might be out of date. The stakes are higher than we want to admit, and the system may not be able to handle the pressure. But here's the one thing we all need to remember. These patterns, these cycles, they don't disappear. They only evolve. And the question isn't whether we can stop them, it's whether we can survive them. If you've been thinking about these patterns, if they feel familiar, let me know in the comments. And don't forget to follow for deeper dives as we watch this story unfold.